there's a lot of ways to make money even in a crappy market like this. Anything is doing very, very well. Where it's a physical experience, whether it's like the Museum of Ice Cream or these.
What you've done is taken the tech mentality to real estate. Welcome back to the show, everybody. Today we're going to be talking about how venture capital firms are investing their capital in real estate. And for that, I've got Shane Neman. Shane, thank you for coming on today.
Well, thank you, Joe, for having me. I really appreciate it. Pleasure to be here.
You've got quite a history. So you're a principal at Neman Venture. You work in venture capital, private equity, and real estate. You have a focus. This is what I love. You have a focus on unique or overlooked opportunities. So I want to we'll do a deep dive into that. You also authored a book. Now, your college must have been a lot more fun than mine. So you authored a book called Nightlife Lessons: How I Conquered the Business of Partying with Tech and a Glimpse into Its Future. What made you want to write that book?
It had been stirring in my mind for a few years. I do a lot of venture in tech as well as real estate and other industries. And I found myself repeating the same stories over and over again about my own experiences as a founder. I'm a two-time exited founder. And one of the first companies that I created was a company called Junebug, which basically was like Toast, but for nightclubs and bars. So we were a tech company in 2001, if you can believe it, that went into that niche, mainly because there really was no one serving that niche. And it became a really big business. But what was really interesting about that business is that I did that for almost a decade, and it was a very big and profitable business, but it really punched me in the face all the time and taught me all the lessons I needed to learn as an entrepreneur and as a founder. And basically in that industry, I got screwed in every which way you could possibly get screwed, which taught me some really great lessons. And each chapter of the book is basically a lesson that I learned.
Okay.
And then not just what happened and the stories behind it, but how I use those lessons as an investor now. And how I use it to build subsequent businesses as well.
Well, it sure created a solid foundation for you. So you've been a startup founder in 3 different companies, correct?
Yeah, my first startup failed, but I had two successful ones after that.
But you've backed over 50 startups. That's a lot. So
it's hard to keep track of. I can tell you that.
I can imagine it is. You know, Shane, the thing that got me was your portfolio, your real estate portfolio, because this is really a real estate channel. You have a very diverse portfolio, and it's a mix of real estate. You got some private equity investments as well. So you've got Pacific Park, the Santa Monica Pier. Now that's not a real estate play. That's a business operations play, correct?
It is, but it's highly reliant on its location. So, it's one of the most iconic places on Earth.
Highly trafficked.
Highly trafficked. It's the, teeters between the #1 and #2 tourist destination in all of Los Angeles. It's one of the 10 most Instagram places on Earth, the Ferris wheel. So it's very location based, obviously, and there's only one of it. You can't really recreate that in another location. At least I don't think you can. And so that was really a great mesh of business and real estate, because you have to really understand real estate as well because of the location, and there are intricacies of a lease, a very long-term ground lease, and also being a tenant and those types of things. But then you also have the operations of the park. So it's a great business, iconic, and been there for 30 years. And it's almost like a Warren Buffett style toll booth, if you think about it. But yeah, that was one of the most interesting kind of VCP style real estate deals that I've been kind of looking at. The other kinds of things are, we did tennis courts in Southampton,
Yeah, the
and
racket club,
and
the racket lounge.
yeah, yeah, and so we remodeled that, and then the model for some of these things is not just renting it. It's becoming part of the business that's the highest and best use of that location. So you might partake in capex and TI and find an operator yourself, and then have some sort of base rent, but then participate in profit share instead of just kind of having this like fixed rent. I think that those kinds of models are very interesting because it almost turns your real estate into a business. And
Mhm.
with business, the upside potential is much higher.
Absolutely. Now, the racket lounge, that is, you don't own the real estate there either, correct? You own the
No,
business.
in that one we do. We
Oh, you
do
do.
own the real estate. So,
Okay.
some locations you can own it, some
Yep.
location you can ground lease it. Depends on the locations, but yeah.
Now, are you going to take that business plan? Because I know Padel, I saw that it's really starting to. We've got one of our agents is repping a company that's coming to the United States, and I want to say they're from Argentina. They've got a
Yes,
boatload of locations. Now, are you going to take
yes.
that idea and expand that across the United States?
Well, we did that. So we have padel and pickleball, and
Yep. And tennis. Yeah.
it's a members only club. So it's a very different structure where you can't just kind of go there and play. You have to be a member. So we kind of took like Soho House kind of situation
Okay.
and brought it there. I think you can only do that in select locations like the
Yeah.
Hamptons that are super exclusive, and you can kind of build it around that. No, I think for us to do that, it would have to be in a very high-end location like that. It wouldn't be something that we just kind of open across
Yeah.
America.
Yeah. If you want to do it as a
And
private club,
I
Malibu would be
actually,
good.
yeah, Malibu would be good.
Oh,
St.
Miami,
Bart's
where
would be
you're at,
good.
Miami might be good.
Yeah, maybe if you want to be one of the 10,000 that just opened recently.
You can tell I don't do real
So
estate in Miami, right?
yeah, I mean, I think, probably next year you're going to see a lot of empty padel courts.
Yeah. Well, the
Uh,
pickleball. How? What do you think? I mean, you own a pickleball. How long until pickleball starts fading out, or will it fade out?
no, I don't think so. I think
Okay.
it's just getting started, actually. It's actually it's a growing sport. Um, I think just like anything that is new and the shiny object, um, people are going to push it to its limits
Hmm.
until it breaks.
Yep.
And I think it's a great sport, pickle, padel, all of them. But if it becomes oversaturated, which I think it is,
Yeah.
in some locations, in some places, I know this happened, for example, in Sweden. Padel like took off, and now there are a bunch of bankruptcies, right? And you can
Oh,
buy them for really, really cheap. Um, so I don't know.
yeah.
We're going for a different kind of niche and a different playing field than some of these other guys are.
So now with the racket club, so you have a lounge area, bar. Do you have a restaurant on property as well?
There's food and beverage,
Okay,
but
food and
it's
beverage.
I wouldn't go as far as saying it's like a restaurant,
Okay.
but it's high-end food and beverage, yeah. And cold plunges, and the thing is it's more for like very serious people.
Hmm.
We have pros that are very well known and famous and those types of things that come there,
They're
so you can
teaching there.
correct.
Okay. Okay. Well, that okay.
And
So
we
you
and we have Robbie Wagner, who's really famous, and in New York, he's kind of like the Nick Bollettieri of New York.
okay?
And he runs it, and he's the operator, and he runs three other tennis clubs in New York, so he's well known, that kind of thing.
And this is the only club of this kind in the Hamptons, correct?
I think last season there was a few others that opened,
Popped
but
up.
not in Southampton.
Okay.
There was a few that opened in like Bridge and East and a few others, but in South, I think we're the only ones. Yeah.
Now, how big, how many acres is this property?
7.
7 acres. Wow.
Yeah.
It's a
Yeah.
pretty good chunk of property. I want to
Yeah.
go
Yeah, it
back
is.
to the park, Pacific Park. Now that is a cash flow play, obviously, right? Or
It
is it?
is.
Or
It
are you
is.
guys
Yeah.
going to
Yeah.
add stuff to it?
No, no. I mean, I think, we did add some stuff recently. There's now alcohol available, which wasn't available for the past 30 years. So the F&B component has been upgraded. We're extending out the rides um, to make it bigger,
Okay.
so there will be more rides. So there's a lot of things that can be done to increase it, and make the experience better, attract more people to come. The Olympics are coming in a few years
Mhm.
to LA, which this is as I mentioned, a tourist destination, so that helps a lot. Um, and what's interesting is, we're implementing a lot of prop tech. And so I do, what's very interesting is, in this downturn of real estate, um, there's been a real downturn in prop tech venture capital, because what was happening is, I think a lot of the real estate guys that were not into venture and didn't understand venture, they could understand prop tech because they could understand how it would be applied to the things that they do.
Mhm.
And but obviously it's easy to back companies when times are good, right? And interest rates are low
Yeah.
and things of that nature. But I think what's very interesting are the opportunities in prop tech right now, because there isn't a lot of capital in that market. So a lot of the kind of players that should have never been there or really didn't add value are gone. But the ones that are staying around and the new ones are, um, they're chasing very little capital, so you could get really good deals.
Yeah, that's where most prop tech. I know Andreessen was out looking at deals, Fifth Wall, Metaprop, SoftBank Vision Fund. They were all um, doing prop tech. They weren't actually investing in real estate. So you guys are doing something a little bit different, where you guys
Mm.
are actually going into the real estate. And um, is that something you think is going to be easy to be copied?
So I think what's happened is they've realized, at least the venture companies, they're breaking it into an opco propco model.
Okay.
And then the propco, they go and look for real estate investors, and the opco, they look for venture investors. And that's proven to be a little bit easier, because it's less hairy,
Hmm.
and the venture guys don't really want to be in real estate, and the real estate guys don't want to really be um, in
Right.
venture. So that's one kind of strategy that's been used by startups, which are prop tech that really physically need
Hmm.
real estate to do that, right? You'd probably see this in like a company like Casa, for example, that's like a modern day Marriott
Hmm.
platform, like a extended stay platform or a hospitality platform.
Yeah.
Um, you know, they need their own places so that they can control. They usually do it in apartment buildings, or they have single family homes, or those types of things. Someone needs to own those, right? And let them manage it. So that's the propco, and then the opco is the software and the support and the entire platform that they have.
The returns are there's a big difference between, venture capital turns into prop tech and venture capital returns into real estate. It's unless, are you guys, what are the returns are you guys are looking for? Approximately, not your exact returns, but what are venture capital firms looking for in
Oh,
real estate?
well, it depends which firm.
Yeah,
If
I
you're
was going to
talking
say,
about
yeah,
SoftBank or those guys, I mean, they would never do some of the deals that we did because the
right.
returns, on a multi-billion dollar fund just doesn't make
Sometimes.
sense.
Hmm.
Yeah, and also it doesn't fit the profile of them. I think, because we're a family office and we have other family offices invested, we're just a lot more flexible on what we can do. And so we could take opportunities that, are there, like buying the
Hmm.
Santa Monica Pier. I mean, think about it. Like,
I didn't know the
I
Santa
mean,
Monica Pier Park Place was even, I thought the city owned that. When I saw that you owned it, I'm like, wait a second.
well, yeah. So technically, they do own the pier,
Yeah,
right?
they own
But
the real estate. Yeah,
yeah, they don't own the operations,
right.
right? So like, there's a bubblegum shrimp there. That's
Yep.
that's that's a tenant. There's
Yep.
other tenants we're the largest tenant, but
Right.
that's the thing. So, um, yeah. So you see these like opportunities come up because they just can't do some of these things. They can't maneuver the same way that we can, and they can't be as creative as well, right?
Yeah.
Because look, if you think about it, at the end of the day, who's running this fund? It's some analyst or a bunch of analysts. And if they kind of go outside the norm of what they're supposed to do, which is like invest in a software company or invest in a prop tech company or that kind of thing, and they get it wrong, they'll be fired.
Yeah.
But if they get it really, really right, maybe they'll get a pat on the back and say, "Good."
Hopefully a nice little bonus too, right?
Yeah, yeah, but the incentive structure isn't there for them to do that, right?
Right.
Because they'd rather not get fired, right?
Right.
It's not like they see that much more upside if they go out. No one's going to fire them for just doing what's normal.
Right. I want to talk about the other real estate you own. So you have the Marriott Residence Inn in Boca Raton, Florida. You have the
Yeah,
Watchtower Dumbo in New York, One
yeah.
Mission Bay in San Francisco, and the Standard
No,
Life.
yeah, that was a long time ago. We
Okay.
did that. We did that one again.
And the Standard
And
Life
so
building.
some of these things like Standard Life, we did a bunch of years ago. We bought that actually, I think in 2016 or 17, in a Marshall sale, a fire marshal sale. Um, that was a really interesting play because it was student housing.
Oh,
Um, and it was empty, and we found other ways to unlock value. Um, we actually just reopened it as student housing. It had a lot of chattel inside of it already, so we could just kind of plug and play it. But
hmm.
what we also realized is that it had retail component that wasn't being, you know, managed properly, and so we filled up the retail on the bottom, and then it had all this. No one saw it, but we went, and it had cell phone towers on the top, so you could actually sell off the cell phone towers
Hmm.
to companies like Crown Castle and those types of
Long-term leases.
things. Yeah, that would buy that from you, and you could unlock value right away
Hmm.
from that. So we that was a very interesting deal. It took a lot of time though. We had to go to Pittsburgh a lot, and
Yeah.
it was a big undertaking. It was a vacant building, but it had been, I think, master lease to one of the colleges there, and then they lost the lease, and so you know we came in and just were like, okay, let's just put Google ads, and those students have to stay somewhere, right?
Yeah.
And it worked out pretty well.
It seems like you
Um,
just kind of do something and figure it out. I mean, it seems like you've just got what you've done is taken the tech mentality to real estate and really just like, okay, I can make this work. And then you have to build that operations team, which I can't imagine hasn't been that easy, but obviously it's worked well for you.
it hasn't, so I think you have to start it, and then you have to bring in a managing agent if you don't want to manage it yourself. But I don't think these are out of the box things that are just a normal managing agent can do. So you have to kind of get the engine started, um, create the SOPs, and figure it out, and then you can kind of hand it off. So and everyone knows, regardless of that, you have to manage your managing agent. So there's no
Yeah.
there's no free lunch. And real estate, whoever told you it's passive is lying to you. There's no such thing as passive real estate, not even the triple net ones. I think that COVID really showed that to a lot of people.
I agree.
Um, it didn't matter who was your tenant. Starbucks wasn't paying. There's a lot of eye-opening experiences for a lot of
Hmm.
people. So yeah, I think if you take a venture mentality to real estate, you can get outsized gains. Whether it's repositioning a product, a piece of property to figure out its highest and best use. Um, a lot. What's really interesting and what I've been looking at is what are the new kind of in retail, right? What are the new kind of retail offerings that are there where the tenants are doing super well? Um, and it's a lot of research and stuff, but you can kind of see that there's some interesting things happening, at least here in the markets that I know.
Hmm.
Anything entertainment related is doing very, very well. Where it's a physical experience, whether it's like the Museum of Ice Cream or these places where you can kind of go and take Instagram pictures. Um, they got decimated during COVID because no one was going to them. But there's been a big resurgence of these things recently, especially in tourist destinations. There's also I've seen a lot of like virtual reality gaming type places
Yep.
that very very little capex. You don't really need a lot of employees there. So,
Hmm.
you just need like one or two people that are kind of watching over and making sure that, the, the, the people who are coming or, can put it on properly and that kind of stuff. Um, so it's very interesting to see how that's evolving right now.
Yeah. I wouldn't be a good broker if I didn't ask, how do you find your deals? Because every broker watching this, like, how do I get a deal in front of Shane? But
Honestly, I'm on a lot of email lists. I get a lot, and I
okay.
actually read my emails. But most of the stuff that has been very interesting for me is working with one-on-one with brokers and kind of explaining to them what I want, and then them going out and trying to find that. Um, and also just building, a reputation and a relationship with brokers that are active. They call you first when something is interesting, um, and I think you know it's a marketing game, right? You have to, in those two sentences, the first two sentences, grab my attention. I'm not gonna, I'm not, if you have a five cap, multifamily, like I'm not your
Yeah, you're
guy.
not the guy. That VC
Yeah,
money's a little too expensive for that.
yeah. I'm not your guy. But if you have something where you can see a lot more, just like I said, that's creative, um, that you have to have an eye for, then that might be interesting.
Okay.
Um, and honestly, I think I'm not really going into anything unless it's a major market right now, because I think real estate is in a place where you don't need to. You don't need to
Right.
go out of those major markets. You can get really good deals in major markets right now. And I also think that um, a lot of asset classes that are really being decimated, like office,
Hmm.
uh, you know, is interesting right now. There are some really interesting plays that you can do. Um, it's hard. So obviously, I think everyone saw that recently. There's all these funds that have been raised to kind of convert office into multi, especially in major metropolitan areas. That's the obvious play.
Yeah.
But what's the non-obvious play, right? You know, I've actually seen people kind of like, at least in New York City, propose creating sports centers, right? You know, pickle, padel, cold plunge, gym, um, roof pool, that kind of thing, right? Like
Right.
that's something interesting. Or what if you just, even as simple as, I think Office is going to come back, and I'm willing to buy it for like 20 cents on the dollar and just
Aren't we
wait.
all? Yeah. Yeah,
Yeah.
I think there's some real opportunity. I think, people start looking, it sounds good, the conversion to residential, but you start looking at the cost of that.
No,
It's especially if we actually, and I don't want to go political here, but if we do end up getting these tariffs and the cost of import goes through the roof, which maybe it will, maybe it won't, who knows? But, it's something you have to take a look at. And
I agree. I think that listen, I think unless it's subsidized, it's probably not going to work, or
right.
there are proper incentives that cities give. Um, I think I think that's unlikely. I mean, cities are not, they're not businesses, so they don't really understand, unless the people who are doing it have enough clout in the political environment to,
Yeah.
change sentiment and change laws, and kind of have things align with themselves. But look, I think you and I spoke about this before. Um, I think REITs are cheap. So if
Yep.
I was an investor, I mean, if you look at Prologis, it makes no
Mm,
sense.
I know.
I mean, they're like really, they're I mean, it's like, I think it's like maybe trading at a six something cap, when you do the math right now.
Hmm.
And they're like the leader. They're the best industrial player. You can't get better than
They're
Prologis.
huge.
And they're getting into data centers,
Hmm.
and they're doing everything right. But yeah, sentiment, everything is about, um, rates.
Yeah.
So like, what happens if you're wrong about rates? What happens if rates come down? Um, and I think it's like a coiled spring, right? And stocks act differently than real estate does in terms of how fast it moves and how much it could move and how much the pendulum could swing. So, I actually think that you're going to see a lot of competition of dollars going into either a REIT, or, like and also there's pros and cons to everything, right? With buying a REIT, you have the liquidity, you can borrow against it as a stock. Um, Especially if you're an LP and you're not really actually, you're not the GP, or you're not physically buying the real estate, but you're not going to get the depreciation and all the other stuff that comes with it. But you can also be much more nimble. I think it's a coiled spring. Like, if things change, or all of a sudden leasing activity in office starts to come,
Hmm.
and work from home is abolished, and all this kind of stuff. And I don't think it'll happen overnight, but once sentiment changes, right, you're going to see those stocks probably skyrocket, and the pendulum will swing too much the other way, but you could take advantage of that, right? You could see these stocks double. It's very hard to double your money and in a short period of time, um, with physical real estate, right?
Yeah. How less
So
work investing in a real estate investment trust. How are you in a good number of REITs, REITs?
yeah, so I actually like Prologis. I've done a contrarian. Um, I've done a couple of data centers
Okay.
that I did previously that, are interesting. I think, these Bitcoin miners that are turned into hyperscaler data AI data centers. Um, the other thing that I think is very interesting is West Coast office REITs, Class A office REITs. Um, I think they're just killed, killed. I mean, like it's like all-time lows, right?
Yeah.
75% of NAV, or like what they think NAV is,
Hmm.
right? Obviously, NAV has changed. There's no doubt about it.
Right.
But 75% below NAV is pretty crazy. You'd really have to think that they can't do these REITs that are really, like run by really good people, and they have really good Class A assets
Hmm.
on the West Coast. You'd have to think that, first of all, there is no back to office. You'd have to think that even if they have some debt maturities coming, that they can't work them out, which I think they can, right?
Banks don't want the properties back, do they? Don't you think they're just going to say, okay, let's get this worked out?
Yeah, they'll give a couple year extension.
Yeah.
Maybe they pay down the loan a little bit, and maybe they pay a higher thing, interest rate. But I don't think it's like 75% of NAV. I mean, I could be wrong, like, but that just seems like the pendulum swung too much. Um, and it's like maximum negativity, right?
Yeah.
And these are the times you want to buy, because I think when you look back in a few years, you're going to be like, wait. I mean, that happened, for example, with SL Green, right?
Oh,
SL
yeah.
Green, in New York, everyone thought New York office was never going to come back. It hit all-time lows like maybe 2 years ago.
Hmm.
And it's up like 400% since then.
Yep.
Two, 300, 400%.
Well, I think,
The stock.
you've got to really look, real estate, investing in an REIT is not that much different than investing in real estate. You still have to do your due diligence. You got to go see, like, these office buildings out here in Los Angeles, you go downtown, that's probably one of the rougher areas to get tenants, 80 plus 90% occupied, the Class A office buildings. And
Yes.
so you've got to, as an investor, you've got to go in and do the research and look at the assets and, look at the team behind it. What else do you look at when you're investing in a REIT?
Well, you got to look at their debt load.
Yeah.
So their debt load, their debt maturities of
Hmm.
when those are going to come due, because they're going to have to refi. And I think you really have to look at the management team.
Yeah.
You have to, I think that's like the biggest thing is like, who are these people running this REIT?
Yep.
Are they capable of, getting through this? And can they make good decisions?
Hmm.
Which they're probably going to have to. They're going to probably have to sell some good assets to rebalance and like kind of stabilize, right? Um, but how quickly, how smartly, intelligently they do things, is a function of how experienced they are and who they are.
Yeah.
I wouldn't just go into any REIT. You'd have to definitely do your diligence, and also just like some of it is just like logical, right? Like
Yeah.
you go and look at some of their stuff, and you're like, oh my God, this is like the best building in San Francisco that they own. Like, I don't think that's going to go to zero. You know what I mean?
No, I agree. There's a couple of people I know that invested in office in downtown San Francisco 3 years ago, and everybody's laughing at them. Those buildings are full.
Yes,
They're cash flowing
yes.
like you wouldn't believe right now. He knew. Now he's an insider. He's done a lot of work up there. He knew that AI was going to come in and come in strong, and so he prepared for it. I mean, the buildings are beautiful. You run everything off of your cell phone when you walk in. If you want lunch delivered, you want to book studio time in the studios they built in. Just great operators. You got to find the great operators. So,
Absolutely. So I think the moral of the story is that there's a lot of ways to make money even in a crappy market like this as
yeah,
a real estate investor, if you're willing to kind of go outside the bounds and start looking in places that people don't traditionally look.
yeah,
And it's more work for
yeah.
sure. And
Absolutely.
it's not like the cookie cutter template way of doing things. Um, but I got, desperate times calls for desperate measures.
Or creative
And you,
people like you. I mean, I don't know. I looked at, you look at the last few years and it was just everybody was making so much money. It was so easy. And so many people got into the industry going, this is it. And I'm like, just wait, just wait. And I know that you were doing the same thing. And
yeah.
we knew that this opportunity was coming and you're capitalizing on it.
Yeah, well, actually when I had moved to Miami about 10 years ago, I had bought a lot of like industrial and CRE in general here in
Hmm.
Miami. And then post COVID, well, I bought it like 10 years ago when no one was in Miami. And so I had come from New York, and New York was like two caps for everything. And
Yeah.
then I came here and I'm like, oh my God, this is an eight cap. How is that possible? Like it's in like the best area of Miami, like a
Hmm.
decade ago, right?
Right.
So so I started buying up stuff. And then, post COVID, I mean, I'm not smart. It just the way the chips fell for me. Um and then, all the New Yorkers and LA people came,
Yeah.
and they're like buying up real estate in Miami, and they're used to paying two or three, four caps or
Yeah.
whatever. And so there, I got offers I couldn't refuse because I'm thinking to myself, like, how can I extract more value than this?
Yeah.
Right? When someone gives you like a three cap offer for something you bought at an eight cap or a seven cap or, that kind of thing. Um, so, so listen, I guess just like any other asset class, there's a time to buy and a time to sell. And you have to kind of be intuitive about that, I think.
Yeah. Lots of studying. So what's next for you, Shane?
Um, well, I'm looking forward to New Year's, to tell you the truth, and taking a little bit of a break. What's next? I'm really optimistic about America. I'm
Yeah.
very optimistic about opportunities. I'm optimistic about I'm a tech guy, so I like Elon, and I like the way he thinks, and I like how JD Vance thinks about things because he was a venture guy. Um, just in terms of economics and business and that kind of stuff. So I'm really optimistic. I, I I think that things are not, I think that the rates are going to come down.
Hmm.
People think that it's not, and the 10-year is proving me incorrect so far, and people think that inflation will continue to go. Um, I'm not so sure about that.
Yeah.
I wouldn't bet wholeheartedly either way, but I would probably position myself to be hedged. That if inflation does come down, that you can capitalize on that.
And be ready to go. I'm going to put
Absolutely.
your website down below, shaneneman.com. How else can we get hold of you?
LinkedIn,
LinkedIn.
best way. LinkedIn or I check the emails from my website as
Okay.
well.
All right. Well, Shane,
Yeah,
thank you very much for coming on today.
absolutely. Well, thank you for having me. This was super fun.
Yes. And hopefully we'll get you back again soon. And for those of you watching, if you could, please give us a like. And if you haven't done so, make sure you subscribe.